In economics, a supply and demand zone is a graphical representation of the relationship between the quantities of a good or service in the market and the prices that producers are willing and able to pay. The graph is usually represented on a coordinate plane, where the x-axis represents quantities of the good or service available, and the y-axis represents prices. The supply and demand zone is typically located at the intersection of the market supply curve and the market's demand curve. The market supply curve is the curve that shows the relationship between the quantities of a good that producers are willing to produce and the prices that they are willing to sell the good for. The market's demand curve is the curve that shows the relationship between the quantities of a good that consumers are willing to buy and the prices that they are willing to pay. The location of the supply and demand zone is determined by the price that is closest to the intersection of the market's supply curve and the market's demand curve. When the price is higher than the market supply curve, producers are willing to produce more of the good than consumers are willing to buy.